So hello guys, I'm doing a valuation report on FedEx, and I'm recommending a buy rating on it from a current target from a current price of $219 to $316, showing an upside of 44.5%. And I'm initiating this coverage based on uh, DCF based valuation using a weighted average cost of capital of 11% and terminal growth rate of 1%. Main highlights are the FedEx is targeting 4 billion savings to boost margin. Robotics and AI is set to cost 2 billion in cost by 2027. E-commerce demand is supported steady volume growth, and there are some risks included like execution risk and cost saving and technology challenges and intense competition and pricing pressure. So moving on to the background, it is FedEx is a US-based global logistical company in over 220 countries and territories, and it's one of the world's largest providers with a 12% share of global logistical market. Its key businesses include express segment, ground segment, and freight segment, and FedEx is focusing on automation and sustainability and global expansion, targeting carbon neutrality by 2040 by EV vehicles and sustainable fuels. So let's move on to my three stories. FedEx targets 4 billion in savings to boost margin. This is due to the Thrive program, which focuses on combining FedEx ground and express networks, closing underused facilities, cutting management layers, and upgrading its technology system to automate sorting and delivery routes. So, of the 4 billion targeted savings, 1.8 billion has already been achieved, and with extra 2 billion expected from facility and route consolidation. So due to this, I'm indicating improved profitability and lower capex, and these are set to lift the free cash flow, supporting debt reduction and buybacks. So robotics and AI is set to cut 2 billion in cost by 2027. So the FedEx is investing in robotics and AI to improve productivity and reduce cost across its network. So the it is aiming automation through AI, which will help in analyzing traffic, weather, and parcel volumes, lowering overtime and fuel time costs. So I project this will reduce SG&A and handling costs by 5 to 6% over the next 3 years, directly improving operating margins. E-commerce demand supports steady volume growth. So in the recent years, e-commerce has been growing rapidly and showing great demand. So I forecast that this will drive 3 to 4% annual revenue growth in US parcel volume through 2027, supporting top line expansion. So let's move on to industry uh, analysis. So in all of the industry, UPS leads the market, which followed by DHL, and FedEx is on third place. So the global transportation industry is set for strong growth led by US logistical giants. So the global transportation industry is set to double to 18 billion in terms of revenue by 2030. And FedEx holds 21% market share in the courier segment, which is similar to UPS and DHL, which showcase their dominance. And EV vehicles reshape the future of transportation. So many firms will shift to EV vehicles to meet tightening environmental rules, which is in line with the FedEx's plan to achieve carbon sustainability. Innovation offsets disruption in a fragmented global trade environment. So the global transportation industry is facing geopolitical tensions between China and US, and this made a fragmented global trade environment, and industries are challenging it and are set to recover. So, moving to quarterly results, the main focus is on EBIT. EBIT growed 11%, 11.2% year on year, and revenue also rose 2% year on year to $22 billion. The EBIT was due to Drive program and revenue growth due to higher volumes at FedEx Express, which was partly offset by weaker freight performance. So the latest news includes that FedEx suspended its full year outlook due to macro uncertainty and weak demand. It signed a multi-year deal with Amazon to deliver oversized packages. And ahead of quarter four earnings, option traders expect a 7% move in FedEx stock. So the consensus estimates are also showing a buy and hold weighting, over 65% to maintain a buy rating, while 25% neutral with hold recommendation. The target price induces a 26.1% upsides from a current price of 218 to target price of 275. So EBIT margins are projected to gradually rise from 7.1% uh, in 2024 to 7.9% in 2027. So, and net margin is also expected to recover steadily. So, moving on to the revenue breakdown, FedEx Express sold 47%, ground 39%, freight 10%, others 4%, US 72%, and international 28%. So, as you can see, the revenue has been declining in recent years, but it is set to recover due to cost efficiency and top line expansion due to e-commerce. And I'm expecting a turnaround story in FedEx. So moving on to the FEMR, so it is remained neutral relative to 1290 non-financial companies in the US due to strong fundamentals and valuation, which is offset by risk and momentum. So fundamentals are great due to operating profit margin, and valuation is great due to lower PE. So moving on, the FedEx shows room for improvement in profitability and room for improvement in growth. It is ranked weight in profitable growth, uh, and profitability is great, and growth is slightly slower. So the profitability remains at average level. Growth were slowed down, but it's rebounded, but is still inconsistent. The asset turnover remained consistently above peers. Its rank is around 3 and 4 constantly, and net margin rank holding steady at mid-level. The sales growth slowed after a pandemic surge, but is recovering, and net margin changed. Margin impacted peaked in 2021, then flattened. So moving on to the P&L statement, its revenue is growing due to e-commerce and other factors, and its EBIT is also growing gradually, which leads to an improving the net profit. Its cash and short-term investments are also growing till 2029, but they are a little volatile, but the company is not holding too much cash. Net fixed assets are also growing gradually. So long-term debt is growing gradually, but not too fast, as it's also paying off some of its debts. And depreciation and amortization is also rising gradually. So moving on to some important ratio, gross profit margin, debt to equity. It's on average level, and gross profit margin is increasing due to drive program and other initiatives. Its revenue is also increasing, and its net profit margin is also set to increase due to lowering of costs. So moving on to the free cash flow data, the cash flow PAT is increasing over the years till fade period, and its capex is also increasing gradually. So that shows that company is not holding too much cash. So this results in the free cash flow to the firm, and the free cash flow is good, and I think it's that results in this valuation. So moving on to the relative valuation, the FedEx is very cheaper compared to the world, Asia, world, and USA. That is basically due to its lower PB. Uh, and moving on, it is a relative valuation. The FedEx is slightly cheaper due to its PE to growth of 2.2x. So moving on to the valuation and target price. So I derived my valuation from cost of equity of 13.5%, which comes from market risk-free rate of 3.5% and market risk premium of 10% and company beta of 1 and weighted average cost of 11%. So uh, I am using the free cash flow to the firm approach because of FedEx's stable cash flow visibility and capital intensity with the limited dependence on dividend. So that's why I'm showing a target price of 316 from a current price of 219. And as you can see, there are some difference in DDM free cash flow to the firm and equity approach, but not much. So in my sensitivity analysis, uh, the optimistic case results in an target price of uh, 347 target price and the pessimistic case in 285 if I mess with gross margin. So the main risks are execution risk and cost saving initiatives, technology implementation challenges, slower than expected e-commerce growth, intensifying competition and pricing pressure. But these are not two big challenges if FedEx remains steady and focusing on commitment. So that brings us to the end. And based on all of the previous research, I am recommending a buy rating from a current target price of uh, from current price of 219 US dollar to target price of 316 US dollar, and which shows an upside of 44.5%. So thank you for listening. This is a general disclaimer. Thank you.